Welcome back. We are here looking at the foreign exchange market, and this is going to be the daily forecast for September 23rd, 2020. And we are looking at the Great British Pound and the US dollar, and as you can see, we have broken down quite significantly. We have broken down to underneath the 300 moving average, and we are now trying to get to a 200 moving average. This is all due to the US dollar index basically appreciating, or the US dollar appreciating, which will of course affect most of these currency pairs quite substantially. So yes, we do expect the Great British Pound US dollar to go down to 12.67. And from there we have the 200 moving average, and that should be actually a major support. We can also see historically this area here where the 200 moving average is at the moment was support in the past. If we were to break the 200 moving average, we would go down to this area here, which is around 1251, and then down to this area here, which is at 1224. Well, there's a lot of problems in the United Kingdom with Brexit, with the coronavirus, and now also the appreciation of the US dollar. So, of course, this pair will mostly go much lower. We can also see all the technical indicators are pointing to a lower. We are oversold at this point. So, but I don't think we'll have a pullback before we reach the 200 moving average. Weekly stochastic is pointing right down, and that means that we'll have further sell-off of this currency pair. US dollar yen, we have rallied quite substantially. This is also due to the US dollar appreciating. We can see that all the technical indicators pointing that we are going much higher from here. We were oversold, now we're just underneath the oversold area. The MACD is pointing upwards, meaning that we are most likely going to cross the signal line within the next 2-3 trading sessions. But however, the stochastic is still pointing downwards. This is the weekly. So if we look at the daily, we can see that it is pointing upwards. So we may go and touch this 50 moving average line, which is around here, before we then break down again. Yesterday's analysis, I basically had this square drawn up because it may well be that we'll be trading within this square. We are trading quite sideways, and at the moment we have been touching these lows here. So that may well be. However, I do expect the 50 moving average to be quite resistant. So a pullback from the 50 moving average means that we'll go lower. So Euro US dollar, again, we have broken down through the 50, 20 exponential moving average, 40 exponential moving average, and now we are basically putting our eyes on this green line, which is the 100 moving average, which is around 1157. If we were to break that, we will go down to 1140, which was previous resistant, and this was an area where we used to trade for a very long time. This is the bullish flag that kicked us up to this area here. However, as long as the US dollar is appreciating, which it will do most likely for the next 2 to 3 weeks, this pair will go lower. We can also see the MACD being quite negative. It is basically crossing down to the negative area now. We are not oversold, not overbought, so we may see a lot more room to the downside. And also goes for the stochastic. It is pointing straight down. If you look at the weekly, weekly, it also is indicating that we'll go much further down the next few weeks. So we look at the Aussie US dollar. We have broken down quite substantially. the previous support line of a 20 exponential moving average, the 40 exponential moving average have broken, and so has the 50 moving average. And at this point, we expect it to go down to the green line, which is the 100 moving average, which is around 0.70. So yes, we'll see what happens when we get there. If we break through there, through this moving average, we'll go all the way down to the 150 moving average. However, this area here should be major support. So a pullback from this area here would it be expected. We also have this moving averages moving up through this area. However, the technical indicators are pointing to lower price levels. Both the MACD, the RSI, the stochastic, also the Bollinger Band, and so on. This is fairly negative. At this point, it's probably a better idea just to leave this market alone and just see how far we fall. Don't think that we are in a trend reversal yet, but it depends on the US dollar and the appreciation of the US dollar. If you look at the US dollar, Canadian dollar, we are approaching the 200 moving average. We have broken through this channel here, and at the moment we are testing the 100 moving average. If we have a pullback from here, we have the 50 moving average underneath, and at this point it is also the US dollar that is appreciating and pushing this market, basically this pair, higher. As long as that is the case, these moving average probably won't be that resilient. We had a long period of downturn in this market, and it may well be that that has changed. We'll see in the next few trading sessions. However, the MACD is pointing upwards, the RSI is also in the upwards momentum, and so is also the stochastic is pointing to upwards momentum. So we may see this this pair going through all of these moving averages and going to much higher levels. I would expect this area here to be quite resistant, as this was previous resistance.